Now, the other factor that we need to take into account as part of our cost benefit analysis and overall assessment is that of risk. And this is where our risk analysis comes in with the business case. As we start off with a business case, we often look at a framework to identify our risks and look at those, what are the different sources, and we can think about what are the external risks and what might be internal risks. And these are not always going to be relevant for our particular case, but it's a way of just trying to validate, have we considered everything? So for that external risk identification, commonly we can utilize the PESTLE framework. So with political, economic, sociological, technological, legal, and environmental. Now, the way we're looking at from here is, for example, for our business case, could there be any political risks? Could there be a change of government? Is there the potential that tax policies might change and affect us? What about trade restrictions? There could be anything coming from those or different tariffs in the sense. What about political unrest in the country that we're operating in? When we come to economic risks, if inflation, exchange rates, especially if we're dealing with things from overseas, different interest rates, how well is the economy performing? Could any of these drive risks? And we'd go through each of those different steps, our social, technological, legal, and environmental, to see, but does that stimulate any risks for our particular business case? We'd also do the same from an internal framework, and internally there are many different classifications that can be utilized. Here we have short F, which is our strategic risks, human risks, operational, reputational, technology, and financial. That's it. But once again, the classifications internally can often be very different depending on which organization that you're working in. Um, but as we come through those, for example, our operational risks, is there, have we got any process risks? There's risks in terms of the supply chain that may affect us in the sense of internal resources and or access to resources. And that can also overlap with our human risks in the sense is that can we maintain the talent? Can we retain them as we work through? Now, technology also appears here internally, but here we're talking more about the systems that are within our control, our cybersecurity systems that are under our governance, our data governance policies, these sort of things, as opposed to the technological, which is more coming from the market. And then we've got financial risks as well. That have we got anything in terms of specifically if our business case is large, it has a big budget overrun, does that cause damage for the organisation, or does that create an opportunity on the counter if we underspend? What about fraud and controls? Are there any particular risks coming from there? So we use these classifications as a way of trying to identify different risks and make sure we've considered all the eventualities. And then typically we will then assess the likelihood, what is the chance of those occurring? We'll think about the consequence to the organization if they do occur. And then we will be trying to assess those and evaluate them in line with our company's risk matrix or heat map, which an example shown on the screen here. And here we've got, for example, our first risk, number one. Here we've said that the likelihood is possible and the consequence is major for the organisation. Now, it is important as we work through here to think about the likelihood and the consequence within your organisation. You will have a definition of what is possible. Is that a 30 to 50% chance of it happening? What is major? Well, major might be causes pretty severe harm to the organisation in a sense. It's usually a very significant risk, but here we say it's possible, it's major. And then what we've got because of that conjunction, that sits in this orange category here. So the different categories, the green is usually within our tolerance for the organisation. The yellow is it's a little bit more risk than we'd like to take. It's above our tolerance. But we don't want to spend more money on that managing that risk than the value that we're going to add. So we generally often look at it. So generally, it's a tolerable area in that yellow. Now the orange now starts getting intolerable in a sense. It's more risks than we want to take, and we want to try to make some effort to try to reduce that risk. And then major, oh sorry, the red area there is it is intolerable and it's something we want to now start trying to take some action. And in some cases, depending on where you are in the process, might be you need to pause and fix that risk before, or address that risk before you actually move any further. But here we're looking at it from a business case perspective. So we're looking at what are the things that we can't mitigate and can't control and might strongly influence the outcome of our business case. And this is what's that risk number one. We'd wanting to be considering that and seeing what might that do, how might that play out. And we could be describing that qualitatively in the sense, or we may go further to try to get a range and quantify, well, this is the range of impact that it may well have. And we can then present that with the findings of our business case.